So we'll touch on that big story from yesterday. The president requesting for quite a number, very large sums of money, $21.5 billion loan, 757 billion naira pension fund, and some in some other denominations in euros and all that. But let's look at basically what exactly these monies are for. So the president has asked that this monies be given because he needs them for infrastructure development. The loans are intended to finance key projects in infrastructure, health, education, water security, and employment. The pension bond, now that 757.9 billion naira pension bond is to help clear outstanding liabilities in the contributory pension scheme as of December 2023. This moves now, of course, comes when our debt was, it's quite high. But let's joining me to further just give insights in this forward over to the other conversation is Faiz Muhammad. He's an economist joining us this morning from Kano virtually. Thank you for joining us.
Good morning, Chiamaka. Thank you for having me.
All right, so you've seen the stories, it's make the headlines. Generally, what's your take on this? According to the president, it's a 2-year term borrowing. What's your take?
Well, I think these external loans significantly raise concerns about Nigeria's debt sustainability. While our debt to GDP ratio remains within international thresholds, hovering around 40%, that doesn't really capture the full extent of Nigeria's fiscal vulnerability. The country's revenue to GDP ratio is among one of the lowest globally. We're hovering around 8%, which means most government revenue is consumed by debt servicing. There have been years where debt service has absorbed over 90% of federal revenue, meaning that there has been little room for any capital expenditure or any public services at all. So I feel that this proposed borrowing risks worsening this dynamic unless it's accompanied by a very robust fiscal discipline strategy, particularly through tax reforms and diversifying the economy away from oil.
Okay, so I have a quick one. Now, if we're borrowing this monies, saying that we're using them for infrastructure development, is it not safe to say that those same infrastructures should somehow aid, if not entirely, cover the debt servicing?
Over a long period of time, yes. But over the short period, what you're going to see is an increase in the level of inflation, which is already at record highs. And a very steep increase in the debt to ratio service, which means that we would be paying even more in debt servicing. It's interesting, specifically considering the fact that very recently the administration made a lot of heyday about the fact that we had been able to pay off the IMF loan in its almost in its entirety. And now going back and taking an even larger loan, I think is a little bit worrying, considering just how turbulent our finances have been.
So yes, lastly on this matter, I know that most economies, even America and the rest of them, have everybody has debt, but is there some time or place where we could come off from this whole debt cycle where we pay off this one and then we go and borrow another one, and we just seem to just keep on being in that cycle and circle at the same time? Is it possible to at least not have this so much debt to pay?
Yes, of course, it is possible. Once the economy has been diversified enough from its dependency on the oil market, and there is enough revenue being accrued from various sectors, then it is possible to be in a situation whereby we are dependent on external borrowing to finance the government. But like I said, that is a long-term strategy. It's not something that can be achieved even within the president's term, even if the president were to continue for a full 8-year term. weeding Nigeria off external borrowing is going to be at least a full generation before we are free of our debt servicing obligations.
Okay. All right, let's move to the other conversation. You now see that the African Development Bank has said that Nigeria's reforms are working, economic reforms are working. Just a brief overview of the story. Since mid-2023, Nigeria is undertaking bold reforms, removal of fuel subsidies, exchange rate unification, tighter monetary policy, all aimed at stabilizing the macro economy. Now, according to the AfDB's latest African Development Economic Outlook, the following: that Nigeria has recorded 4 consecutive quarters of GDP growth. The Naira has shown greater stability, boosting investor confidence. Inflation, though still high, is showing signs of moderation. And of course, the AfDB has backed these reforms with a $3.2 billion commitment over 5 years through a new country strategy paper. Now, let's come back to the nitty-gritty conversation. Do you think that this, what the AfDB is saying, is actually real, and actually the man on the street is feeling the impact of those reforms?
No, certainly not. The impact of the government's reforms are not going to be felt by the man on the street for some time yet. Currently, what is happening is that we're seeing a certain level of stability enter Nigeria's financial reality. I think the World Bank is expecting growth of some 3.7% this year, which would be Nigeria's best performance since 2014. And it's a decent performance considering how weak oil prices have been. The reason behind this is that the government has focused on really attacking what have been very debilitating structural distortions in the economy, albeit even if it has happened in a somewhat haphazard way. The removal of the subsidy has helped stabilize the Naira, and we are no longer in a position where the Naira is consistently fluctuating. The central bank has also stopped printing money to pay for what was government profligacy. After the stabilization of the Naira, that means the gap between the official market and the black market has shrunk to almost nothing. That means that investors no longer have to constantly live in fear of a devaluation and then can readily access dollars. This might eventually help Nigeria to diversify, but short term, what it does really help with is helping us ensure that oil production recovers, and oil production has recovered. That so much has been achieved, even in a difficult situation, I think is a testament to a sort of single-minded strategy with which the government has attacked monetary and fiscal policy.
All right, now, so they've attributed the growth of our GDP to economic reforms, but let's look at it. Is it safe to say that away from the reforms, are there other external factors that have helped the GDP grow, say like the global oil prices?
I'm sorry, I didn't get the question.
I said the AfDB has attributed the growth of our GDP to these reforms. However, is it safe to say that away from these reforms, that our GDP has seen a growth due to certain external factors, say like maybe the global oil prices?
I think that's a fair assumption. I do think that oil prices have been relatively stable enough that the government has seen some sort of growth due to these factors. But I do think that we're still in a situation where inflation is particularly high, running at 24%. Food is the biggest driver of that. I think state governments need to increase supply and security to allow better access to the agricultural market. I think that the external factors that have really stabilize the naira have more to do with the simple fact that the world economy itself has reached a sort of nadir where there's a lot of questions about what direction trade is going to be flowing, considering the tariffs that had been pushed from the U.S. economy onto the rest of the world's emerging markets. I think initially that did create a little bit of a question as to whether or not the market would remain stable. But at the current point, I think that the market has sort of adjusted itself to the new realities, and Nigeria is benefiting from that.
All right, now let's tie this up. Now, the AfDB is projecting a $3.2 billion 5-year plan into they're supporting their claims with this into the economy. How well do you think that this $3.2 billion commitment be allocated for maximum impact in Nigeria? Should it focus on infrastructure, SMEs? How would you think this money should go?
Well, I think most of it's just like the presidency has intimated, should really go into infrastructural development. This could enhance logistics and reduce business costs, thereby attracting foreign investment. Of course, investments in education and health would also improve human capital, which is foundational for sustainable development itself. But I think all of this really hinges on effective implementation, strong governance, and proper oversight. If mismanaged, the loans could inflate public debt without delivering meaningful returns and therefore compound our economic fragility. So really, economic impact largely depends on the strategic selection of projects and the government's commitment to a transparent and accountable use of these borrowed funds.
All right, thank you so much for your insights today on the program. We'll have to wrap it up here to get to other programmings for the day. It's been quite insightful having you on the program this morning. That was Faiz Muhammad, an economic expert, talking to us on the AfDB's report saying that Nigeria's economic reforms are working. And of course, our president's loan request they made to the National Assembly just a few days, just yesterday actually, asking for certain amounts of loans. Share this insights with us on that. That's how much we have for you this morning on Business Daily. For more of our news, programs and documentaries, do well to follow us on our social media platforms and on our YouTube live streams. I'm your host, Chiamaka Nwafor. Same time, same place tomorrow. Bye for now.